If you earn income from a side hustle or you work for yourself full-time, you may wonder if you should incorporate. It's an important question that many small business owners, freelancers, and contractors struggle with. But don't worry, this video will review the pros and cons for incorporating your small business. Hi, I'm Laura Adams, an award-winning personal finance author and Money Girl podcast host with over 43 million downloads. For over a decade, I've helped millions of readers and listeners understand how to manage money and build wealth. Our goal is to offer tips and advice you can put into action for more financial security and success. Although incorporating a business sounds complicated, it's simply the process of declaring that your business is a legal entity separate from you as an individual. You have several options, such as becoming a C corporation, an S corporation, or a limited liability company. Incorporating your venture is generally not a legal requirement. However, it can give you strong protections that every small business owner, freelancer, and part-time side worker should consider. Here are 5 primary advantages of incorporating. Number 1 is protecting your personal liability. Being a corporation or an LLC limits your personal liability if your business has financial trouble or gets involved in a lawsuit. If you're an unincorporated sole proprietor, you can be held personally liable for business-related activity or debt. For instance, let's say you lose a lawsuit for breach of contract, or you don't make enough profit to pay a business loan. The injured party or creditor can go after your business and personal assets for compensation. In other words, your personal belongings are always at risk when you're a sole proprietor. The second advantage of incorporating your side hustle or business is tax advantages. Here's an example of the difference in taxation between a sole proprietorship and an S corporation. Let's say you're a virtual assistant making $50,000 a year as a sole proprietor. You'd owe ordinary income tax plus self-employment tax on the full amount. But if you were a single owner S corporation and made $50,000, you'd have the option to leave some money in the business or to take distributions, which are not subject to the self-employment tax. For instance, you might choose to take $30,000 in salary and $20,000 in distributions. In that case, you'd avoid paying self-employment tax on $20,000, which could save a bundle compared to being a sole proprietor. Number 3 is taking more business risk. Since incorporation separates you from your business, you might feel more freedom to swing for the fences and take additional business risk that makes growth possible. The only loss you might experience would generally be your original investment in the company. Number 4 is having a credible identity. Having Inc. or Corp. After your business name gives you credibility as a corporate entity. Additionally, since a corporation is its own entity, it can outlive you. Depending on your field or industry, some customers or clients may prefer doing business with a corporation rather than a sole proprietor. Advantage number 5 is having more funding options. If you're interested in attracting equity investors, you can raise capital by selling shares of corporate stock to grow your business. While there are many advantages to incorporating, there are also some disadvantages. The main downside are fees to get set up and maintain your corporate status each year, which vary depending on the state where you do business. Plus, your annual tax preparation gets more complicated and may cost more. The answer to when you should incorporate your business depends on many factors, such as your risk of getting into a lawsuit, your tax liability, and business goals. If you're engaged in a risky business, like being a gym owner, having a dental practice, or selling edible products, you'll need plenty of protection and should be incorporated in addition to having business insurance. But for other low-risk businesses, like providing editing or being a graphic designer, business insurance may keep you safe and give you peace of mind as a sole proprietor, especially if you don't have employees. Since the needs of every business owner are different and the tax law varies from state to state, set up a consultation with a business attorney or a tax professional to discuss incorporating. To learn more about starting a venture and getting a business loan, visit finder.com. Thanks for watching. If you like this video, please subscribe. You'll get notified when there are more helpful product reviews, money tips, and advice.